Good morning and welcome everyone to the Moneycontrol live stream. You're watching the opening bell and I'm your host Nickey Mirchandani. Indian equities are set to open lower, tracking global peers. A bit of caution ahead of the US Fed rate decision. US market ended lower on Tuesday as the two-day monitoring meeting of the US Federal Reserve convened. FOMC is widely expected to keep the interest rate unchanged. Asian markets traded lower following overnight fall on Wall Street, and China kept its benchmark loan rates unchanged for September. Talk about FIIs, they've sold shares to an extent of 1,236 crore, and DIIs, on the other hand, have purchased equities but only to a minuscule amount of around 552 crore. In terms of the F&O cues that we have for the day, FIIs would be net sellers in index futures, along with that in index options and also stock futures. Where they've actually been buyers is Bank Nifty futures and also been buyers in Bank Nifty options. In terms of F&O ban, what comes in new in ban is PNB and Delta Corp. What still remains in the ban is Indiabulls Housing Finance and Balrampur Chini, BHEL, Z Limited, Manappuram, along with IEC, REC and Chambal Fertilizer. The list is rather long. Let's talk about what comes out of the ban. Hindustan Copper and India Cements essentially are the two stocks that are out of the ban. Let's get to know more about the trade setup, strategy of the day and F&O updates with Rajesh Palviya. Technical research heads. The technical research is Axis Direct. Morning there. How's the trade setup looking, Rajesh, at this point of time? What are you suggesting to our viewers? And also let's talk about HDFC Bank straight up. A lot of analysts meet, perhaps downgrade coming in from Nomura on account of the merger synergies perhaps not percolating or translating into financials as expected. What's your call on Nifty, Bank Nifty and HDFC Bank?
Good morning, Nickey. So setup looks to be on little bearish for Nifty as well as for Bank Nifty. In the previous session, we have witnessed a long unwinding for both the indices. If you talk about Nifty, most of the call writers have added their position at 20,200, 20,300 strike for this weekly options. On the other hand, 19,900, 20,000 are having still a major put concentration. So looking at the overall setup, there was some pressure we can see in the today's session also on the Nifty, and possibly Nifty may attempt to go down towards 20,000, 50, even 20,000 level. That is the level we are seeing for the Nifty on the downside. But overall structure for Nifty is on the bullish side. So buy and dips is our strategy to play this down move or to play this range bound behavior of the market for next couple of trading session. We are initiating here short straddle strategy of 20,100 strike. So by initiating this short straddle, we are almost pocketing 150 rupees as an inflow of premium, and we will keep a stop loss of 190. And once the premium shrinks to 60 rupees or 70 rupees, we will book the profit in next one or two trading session. So that's the strategy we are initiating here, looking at the Nifty setup. On the Bank Nifty, the important level for Bank Nifty at this moment is around 46,000. Until the Bank Nifty not able to sustain our 46,000 level, we might see further more pressure in the Bank Nifty, and possibly Bank Nifty can show some more cut from the current level towards 45,700, 45,600, which are the next major support area on the downside. So we will wait, let the selling pressure to settle in the Bank Nifty, because trend is a little bearish for the Bank Nifty on the near-term setup. Until the Bank Nifty not crosses above 46,100, we will not initiate here a buying position for trading perspective. But overall structure for Bank Nifty is on the bullish side. So we will buy in the decline, but let the selling pressure to absorb or settle at some point. PSU banks are especially looking very attractive, so we will look for buying some PSU bank in the decline. If we talk about HDFC Bank, there was a selling pressure, short build-up was there in the previous session. Volume spike was there in the cash segment as well as in the derivative segment. Stock slipped below 200-day moving average in the previous session. Looking at the weakness on the near-term setup, we do expect a further more cut. We can see in the today's session also 1575 is the major support area on the downside. So we will review again. If it's not hold 1575, then we can see further follow-up selling in the stock prices, and then it can go down towards 1550, even 1535 also in the continuation of this trend. So overall structure on the near-term setup, it looks to be slightly bearish for HDFC Bank. 1575 is the immediate target. Those who are already having their short position in the stock, they can hold their position with stop loss of 1660.
All right, that's the word coming in. Perhaps you'd want to chat more about the PSU banks, because that's the theme, right? The other day I was talking also to Sushil Kedia, and he suggested a 30% correction in the potential small PSU banks. You said you're pretty much bullish. So would you want to segregate the PSU bank in two categories? And what's your pick looking like?
So, Nickey, there is a different behavior in PSU Bank. Most of the PSU Bank stocks now manage to give multi-month, multi-year breakout on their monthly as well as on the yearly chart. And in this kind of bullish market, when you get these kind of breakout, most of the PSU stocks, I'm not talking about one or two PSU stock, Canara Bank, Bank of Baroda, Central Bank, Bank of Maharashtra, Union Bank, most of the bank now managed to give breakout of their previous high of 2018, 2017. So when you get these kind of breakout in these stocks, so then possibly another round of rally we can expect because this is multi-month, multi-year breakout which is taking place in the PSU space. So we are bullish from F&O universe. We are bullish on Canara Bank and Bank of Baroda. Buy on dip should be your strategy. From cash segment, we expect a Union Bank is the bet where one can look at to buy. PNBs are looking also very attractive. Stock managed to give breakout above 72 level. So PNB is also buy. So Canara Bank, Bank of Baroda, Union Bank, and PNB, these four banks we are looking to buy if any decline comes in the near-term setup.
That's the word coming in, pretty much covers most of the universe there in the PSU Bank, and we've also spoken about HDFC Bank, but I'd like to dwell on it a little bit before we address the market open. HDFC Bank held an analyst meeting a day before yesterday, where they pointed out aspects which was announced from the time of the day merger was announced. A couple of negatives out there. Margins are badly squeezed due to low margin HDFC loan plus regulatory requirements. Merged entity loan growth is likely to slow down significantly from 20% to 12% now. Asset quality also likely to see a significant deterioration, and profit estimates likely to be cut significantly by most of the analyst community, and we're already seeing the pain point of it coming in from Nomura, which has downgraded the stock. Of course, there are going to be a bit more that we're going to be talking about just in detail, but that's the stock of the day perhaps that we'll be looking at. Nifty 50, we're looking at profit booking creeping in early deals, weakness as extended, probably a cut coming in 20,000 mark. That's where the Nifty holds on to that level. Remains to be seen if that level has been, it surrenders to more amount of selling pressure ahead of the US Fed rate hike decision. The meeting has convened, but the decision is pending. A bit of caution clearly right now for the markets, down with losses of almost 0.75% or less than 0.75% for Nifty 50. Let's talk about Bank Nifty just to see how that is stacking up for you. We're looking at losses. 0.75% of loss coming in for Bank Nifty 2, where the level is to an extent of 45,630. So it's below that 45,650 mark. So that's the one that you need to be looking at. Essentially, the losses could be led by HDFC Bank, just to see because of the analyst meet that was conducted and the views that came out, with slew of brokerages somewhat maintaining the rating, but most of them actually suggesting a bit of overhang on the counter after the merger. Look at that, the stock is down and out in early deals and probably weighing on the Bank Nifty index. Let's talk about mid-cap index. We're seeing losses to an extent of 0.8% coming in for the mid-cap index too, and small cap acting no different. Perhaps coming to selling pressure. Extent of loss is to 0.5%. Let's talk about what we have in terms of the sectoral indices. IT is down and out. And also let's talk about other sectoral indices that we have right now. Pharma is perhaps down with losses to an extent of 0.3%. And in terms of FMCG basket, that is also slipped in red in early deals. and losses to an extent of 0.75%. So all the defensive names essentially have taken a hit. And if you talk about something like a realty, something like an auto, and importantly, something like a PSU Bank index, which has been doing well thus far in trade, remains to be seen if that also surrenders to selling pressure. Auto pretty much feeling the heat, and PSU Bank has managed to somewhat float flat at this point of time. Losses to an extent of 0.1% coming in for PSU Bank index. Perhaps that's the index where most of the analyst community has now gone on bullish. But do remember the fact that the free float of most of these PSU bank companies, PSU banks, are very limited. It's mostly held by the government of India, which is acting as a promoter entity. So very limited free float out there for PSU banks. Also, let's talk about realty index just to see how that is stacking up for you. But do bear in mind that Nifty is below 20,000 mark right now. If you can pull up Nifty just to see if that important, crucial level has been taken off, it is not a great start that we're looking at. 20,000 mark has been taken off. Let's look at the top gainers and the top losers that we have on the screen right now, just to see how the trade has been stacking up. Cipla, L&T and IndusInd Bank. These are some of the top gainers that we have early morning. In terms of the other gainers, ICICI Bank, Adani Enterprises and Axis Bank. Clearly, it's the other banks that have been doing well. Loss of a rival company is definitely a profit of the other private sector banks. It's a day where private sector banks are shining in green. Look at that. HDFC Bank, Apollo Hospital and BPCL. These are some of the other top losers that we have pretty much anticipated on that one. Britannia, Tata Consumer Products and UPL. These are some of the top losers that we have in early deals. Let's now talk about RR Kabel, which is going to be listing in on exchanges today. And it's the first company, perhaps, to list in the T+2 timeline. So that's one which is coming close to what we were anticipating. The issue price has been fixed at around 1,035 per share. So that's also something that we need to be watchful of. And in terms of the grey market premium, 10 to 15% is what the analyst community is suggesting. Do bear in mind the fact that it's an OFS heavy IPO, which perhaps raises a lot of caution amidst the investor community. But do also bear in mind the fact that the IPO was subscribed almost 18.69 times during September 13 to 15. Tata Motors is another one that you need to keep on your list. It's going to be increasing in their prices of its commercial vehicles up to 3%. Now, the price hike will take effect from October 1st, and it's going to be across the commercial vehicle segment. It's essentially done to offset the residual impact of the past input cost pressures, and that's the word coming in essentially for Tata Motors. Right now, the stock has been doing well with gains to an extent of 0.4%. Let's talk about HDFC Bank and what Jefferies has to say. It's maintained the buy rating. Perhaps Nomura was the only one which went ahead and downgraded it, but Jefferies says it's maintained the buy rating. It has revised lower the target to 2030, and in the hosted analyst meet, which essentially which took place, it was to clarify the transition impact upon merger with HDFC. Look at the stock right now. Perhaps the top losers down and out with losses close to 3% It's just the losses are just magnifying in early deals. Impact on NIMs will be tad higher than expected due to higher liquidity. That's the word also from the brokerages. The non-performing loans of HDFC are also higher. Net worth impact of 5% is mostly for non-cash and transitional retail deposit. Mobilization is holding up. That's the word coming in for HDFC Bank. A bit of caution from the investor community. None of them have actually gone ahead, barring Nomura, that is downgraded, but most of them have revised lower the target price. So the theme for the day is private banks and not PSUs. Talk about Jefferies. It's come out with a report on OMCs where it has upgraded GALE to buy rating, and the target has been set at 136 per share. It's also upgraded GALE on better LPG, petchem and trading profitability in FY24. On the other hand, it has gone ahead and downgraded BPCL to underperform and target at rupees 310 per share. It expects EBITDA loss in BPCL in the second half of the financial year on steep marketing losses in diesel. It's reiterated the underperforming rating on HPCL, and the target remains at 210. For RIL, it sees limited impact with refining strength. Essentially, that's the word coming in. I'm going to go back to Rajesh and check with him. What does he make out of the private sector universe right now? He spoke about HDFC Bank, but something like an Axis Bank is also doing well in early deals. How is he looking at the entire space right now, and what are his stock picks?
So the only the pressure which we are seeing in the bank Nifty, that is especially by the HDFC Bank, but rest other banks are still looking promising. Most of the banks are showing good buying interest, especially in PSU banks are still buying interest is there. We discussed about Union Bank, it's trading higher. IndusInd Bank is also looking very promising, and we believe that if IndusInd Bank hold 1440, 1445 level in this pressure also, then IndusInd Bank can be a stock where one can look at to buy. 1500, 1520 is the immediate target where we are expecting for IndusInd Bank. Even from the small private bank, that is Bandhan Bank, is also looking very promising. Almost stock is on a verge of giving breakout to its multiple supply zone at around 248, 250 zone. So once this breakout happens, then Bandhan Bank can also show further more upside in the continuation of this up move which we are seeing in last couple of trading session. Even on the financial, you can look at some of the NBFC space also, that is also promising, like Bajaj Finance, Bajaj Finserv. Both stocks are looking attractive and buying interest is there. So both stocks are also can be looked at on the buying side. So we don't see any much further follow-up selling in the banking space. Yes, there could be some pressure will remain for some time in HDFC Bank. As we discussed in opening itself, 1575 is the area where we are expecting to fall for HDFC Bank, and almost stock has corrected around those levels. Some buying interest is happening around those levels. So further follow-up selling will come in HDFC Bank. Only breakdown of now 1575. That needs to be watched in today's session. If we breaks below 1575 decisively for HDFC Bank, then this could create further more pressure in the during the day itself for HDFC Bank.
Rajesh, one more thing that I wanted to understand from you. Does it worry you that Nifty is now below 20,000 mark? Would you want advise some caution coming in after the important level has been perhaps breached, or I may say broken off, and Nifty is now trading a little more south towards that range? How are you looking at it?
No, as such, there is no worry at this moment, as 20,000, 19,900 are having major put-based concentration in opening trades also. There is no as such major unwinding action is taking place for these strikes. So I think the put base is still there for these two strikes, 20,000, 19,900. So until 19,900 is not taken out by the Nifty on the downside, that there should not be any worry at this moment. Still, we are holding our buy on dips strategy. I think one should encash this decline as a buying opportunity. Now keep your stop loss at around 19,950 to buy for intraday trade point of view. Again, we expect that Nifty can again move or show some pullback towards 20,080, 20,120 kind of level during the day itself.
All right. I'd also want to understand from you any other stock that stands out for you at this point of time, which has not been addressed thus far, which you'd want to recommend to our viewers.
So I think one should look at power space. Power grid is looking very promising. Stock is comfortably holding about 200 level. Previous session was also good for the stock, and I think power grid one can buy for upside target of 210, 215. From automobile space also, we are expecting furthermore momentum on the buying side can be there. TVS Motor is looking very promising. Mahindra and Mahindra is looking very promising. So one can look at TVS Motor as well as Mahindra and Mahindra to go long for today's session. Even on the AMC side, HDFC AMC is also looking very promising. So one can look at HDFC AMC also at this moment. Keep your stop loss at 26.40 and upside target for HDFC AMC future is 27.20 to 27.40.
All right, Rajesh. Thank you for those views, and we're just going to leave it at that. And thank you for joining us this morning. All right, let's actually navigate our conversation more towards the fundamental side to address the differential that we're seeing within the PSU bank and the private sector banks, perhaps the theme that is playing out right now. And to take the discussion forward, we're being joined by Sushant Bhansali, Chief Executive Officer at Ambit Asset Management. Morning there.
Hi, good morning.
Hi. I'm going to start off by asking you straight up, what do you think about something like an HDFC Bank? There was an analyst meet, perhaps to understand about the transition of the merger which has taken place. And most of the analyst community are perhaps penciling in more of NPAs, which are expected to, asset quality, which is expected to deteriorate further, which was not anticipated earlier, a bit of NIM compression, a bit of perhaps brokerages like Nomura have also downgraded the rating for HDFC Bank, and other universe, the other brokerages have just managed to cut the target price. Essentially, a lower earning growth also taking place for this one. How are you looking at HDFC Bank versus the pool of other private sector bank?
Yeah, so private sector banks per se have not participated in this rally in the last 3 odd years, right? Barring probably one or two of them, most of them have stayed where they were. The quality franchises of the past, which delivered great value between 2010 and 2020. Not many of them have participated in the last 3 odd years. And that's why, in our view, that sector is the most attractive right now as a investment thesis in the next 2 or 3 years. And not that they have not delivered numbers. I think most of them have delivered. Of course, with the interest rate cycles, the pressure on margins will be there in short term. But these franchises have proven time and again that they are able to deliver better numbers come what may. Specific cases of banks, I would say that the analyst meets does provide more clarity on numbers and more devil down. But the impact, in our view, especially if you look at across broker reports also, is not much, because this was something which was quite known. If you just do simple mathematics of adding numbers and apply the accounting policy changes because of IFRS versus IGAP, one could have easily, I would say, broadly estimated the impact. Now, with the management commentary giving more clear numbers in terms of the exact figures, it brings more clarity. But and that's why we are not seeing any large reaction to it for this bank.
Okay, the stock is actually recouped. It is actually down and out, and perhaps one of the top losers. But according to you, more so, this has already been expected and anticipated. So a bit of, surprise there, I would say. But let's actually compare this story with the PSU banking story. Which of the story do you like the most, especially because there is a lot of traction now, even in the PSU bank category, which are perhaps trading near their 13-year high, and some of them still demanding a valuation which seems to be below that 1.5 times kind of price to book value. Do you think PSU banks make an attractive bet as compared to the private banks, given the minuscule amount of free float also that they hold? How are you looking at it? And within PSU banks, would you want to categorize?
Yeah, so as you rightly mentioned, there are few nuances around these stocks, whether limited float or whether being a lot of difference between the valuations of private sector banks and PSU banks, and it makes the case more compelling. Ultimately, if you look at across sectors, market is slave of earnings, and we are participants are always in the pursuit of earnings. And in the last decade, 2010 to 2020, the earning disparity was very, very high between private sector banks and PSU banks. With a clean slate, with a recapitalization, and with the government intent of not interfering and creating more and more professionalism within the PSU bank side, investors are excited, and numbers have got delivered in the last couple of years. The question one has to ask is that will this continue? All of these phenomena in the next few years, because valuations of any company bank are based on long-term sort of value for those companies. And if the same thought process continues from a government side, and the PSUs probably continue to deliver, they have the best brand in terms of the trust which they have from people, given the sovereign backing. Right, so many of these franchises do have a great chance to deliver great value over a long period of time. But if they continue to deliver is the only question one has to, I would say, figure out. The other nuance on PSU banks versus private sector banks is the change in management, right? In private sector bank, there has been more stability compared to PSU banks. And ultimately, despite the largest or biggest opportunity, it's the teams which deliver and create the difference in value creation. And private sector banks give investors more comfort. In a short period of time, probably the rally might continue till the time earnings are getting delivered, and the divergence which was there, which has sort of converged in the last 3-4 years in the earnings of these players. If that continue the convergence, then more value will be created. The multiple difference will further come down probably.
All right, a bit of NIM compression perhaps was also seen within the banking space in Q1 essentially. Do you expect the pressure to kind of magnify it a little bit in the short term, like you suggested, before the full-fledged perhaps financials seem to have a little more higher earning growth? Or do you think much of it is already priced in the stock prices and the valuations of these companies?
Yeah, so much of it is priced in because the interest rate trajectory that has a lag effect in terms of reaching out to the numbers, and the effect of increase in interest rates is now pinching the banks in terms of getting the deposits at a higher rate, as more and more 1 year plus deposits are getting reshuffled. The impact will keep on increasing. It will be dependent on, I would say, how the interest rate trajectory moves from here on. In the next few months, everybody is expecting that the rates have peaked out, and we expect rates to come down very soon. Now, if that happens in 3 to 6 months, probably the NIM compression is sort of bottomed out. But if it takes more time, and probably if there is a reversal because of inflationary caution from the RBI side, then probably the NIM compression might continue for a longer period of time.
All right, a very broad-based question, since we have already discussed financials. Let's also talk about your overall, assessment on the markets, the kind of valuation it's looking at right now, with the FIIs perhaps turning as a net sellers after a span of 6 months, crude being on the rise, on a rising spree, and a Fed rate hike decision in the offing. Do you think any kind of surprises which probably lead to further amount of profit booking for the markets, or you think just this is just a temporary blip before the momentum could continue on the upside?
Yeah, seems to be temporary blip if you look at last three phenomena of FI buying and selling in the last 3 years. So when FI started coming back post lockdowns, which was in around Diwali time 2020, in the next 6 months, almost 1.75 lakhs crores of liquidity came from FIs, right? And at that point of time, small and mid were up about 40% each in those 6 months, while Nifty also delivered about 30% in that phenomenon, right? After that, when there were large drawdowns between October 21 and June 22, almost a 9-month period, there was big drawdown of about 3 lakh crores of liquidity getting sucked by outflows from FPIs. But that had a very limited impact, probably because of buoyant domestic flows. But in that era also, the Nifty was down about 11%, and mid and small cap, BSE small cap or Nifty mid cap 100 you see, were down about 12 and 13%. So the point I'm trying to make in both these cases, Nifty, mid caps as well as small caps were moving in tandem. But if you see last 6 months since March 2023, when investors, FPI started coming back, they brought about 1.5 lakhs till August end. There have been slight blip, about 5,000 crores of outflow in the first 15 days of September. But in that period, from March onwards, mid caps and small caps are up about 35 and 40%, while Nifty is up only 16%. So while people might be cautionary on a segment which is probably small and mid caps, I would say that large caps still give lots of comfort. And if the FPI blip probably comes back and flows start pouring back like they did in the first quarter of this fiscal, then probably market will continue to see new highs. We are quite bullish from, I would say, on the large cap side. Many of the great franchises are available, I would say, at towards their long-term average of 10 years. right? While few themes, few stock sectors have been, I would say, giving a lot of, which have given a lot of returns in the past 6 months. There, I would say one needs to exercise some caution. You will notice some categories, whether it's defense or capital goods, etc. They are trading in line with a few of the great franchises who created great value over the last 5, 10, 15, 20 years. Right, the multiples on TTM basis. I'm not getting into forward multiples, but TTM multiples, they are almost in the same range. So from here on, I would say that those segment of great franchises offer great value, as we call the coffee can stocks in our portfolio. They are
Shyam?
offering, they are
Sorry
available
to
at about.
interrupt you. Would you want to name the stocks that you're talking about, which are perhaps trading at near their 10-year long-term averages and perhaps a little more better bet as compared to the broader peers out there? Would you want to name a few?
Yeah, so I would say a few stocks, and probably I can talk only about the portfolio companies in our portfolio for the compliance reasons. But companies like Asian Paints, companies like Eicher Motors, despite a good run-up, are still trading below 10-year average, right? Companies like Page Industries, right? DMart is closer to 10-year average. So there are many stocks, I would say one needs to do a bit of research, but there are lots of companies that are available at a 10-year average multiple. Even HDFC Bank, for that matter, is available, I would say, actually at their 10-year low multiples on price to book.
That's an interesting observation. HDFC Bank at a 10-year low multiple as compared to their price to book, and perhaps also one of the top losers that we have on the index on account of the transition of merger deals that we're looking at. But Sushant, point well taken, and thank you so much for joining us early this morning.
Thank you.
All right, let's quickly address the IPOs that are up in offing and open for subscription today. Signature Global perhaps is the one that is hitting the primary markets today. Issue will comprise a fresh issue to an extent of 603 crore, and the remainder of 127 crore will be OFS. Will close on September 22 and has a price band of 366 to 385 per equity share. The company has incurred losses, do bear in mind, for the last 3 years on account of non-recognition of real estate revenue, which is pretty much in line with the Ind AS 115 standard. It is aiming to be profitable only by FY26 or a little before that. Do bear in mind, it also is a little heavy on the debt part, loss making, which is expecting a turnaround story in offing. Sai Silk, that's another one which is one of the largest retailer of ethnic apparel, particularly saris, looking to tap the primary market with an initial public offering of 1200 crore. The public issue comprises a fresh issue of 600 and the remainder is OFS. Price band opens, of course, the IPO issue opens from September 20 to 22 and the price band has been fixed at 210 to 222 per share. Two issues that opened today, and the retailer of ethnic apparel, apparently, which is big in South, will be using the fresh issue for setting up 30 new stores, which will be at a cost of 125 crore. 2 warehouses, which will have a spend of 25 crore and a working capital requirement amounting to 280 crore. The company will also repay its debt on to an extent of 50 odd crore. So that's the word coming in, and we're going to be chatting with the management in just a bit. So stay tuned even to catch up more action and details coming in from Sai Silk management, which again is open for subscription. 1 debut and 2 more that open for subscription. That's pretty much the details that we have in today's show. But with this, it's a wrap and goodbye from the entire team who puts this piece together. Thank you so much for watching. Please do post your feedback for us in the comment section below. Follow us on the link at the bottom of your screen. And for rest of the updates, stay tuned into moneycontrol.com and Moneycontrol app.